The legal cannabis industry has exploded in recent years, attracting investors looking for high-growth opportunities. With more countries and U.S. states legalizing marijuana for medical and recreational use, many are wondering if cannabis-focused ETFs and mutual funds are a smart investment. Here's what you need to know before investing. Why invest in cannabis? Expanding legalization. More governments are approving cannabis for medical and recreational use, increasing demand. Market growth. The cannabis industry is expected to reach hundreds of billions in global revenue in the coming years. Diversification. Investing in cannabis ETFs or mutual funds spreads risk across multiple companies. Medical potential. Cannabis is increasingly used for pain management, anxiety relief, and other medical treatments. Early growth phase. As an emerging industry, cannabis still has plenty of room for expansion, making it attractive to long-term investors. What are cannabis ETFs and mutual funds? Since individual cannabis stocks can be volatile, ETFs, exchange-traded funds, and mutual funds provide diversified exposure. Cannabis ETFs trade like stocks and track a basket of marijuana-related companies. Mutual funds, actively managed funds that may include cannabis stocks alongside other investments. Top cannabis ETFs and mutual funds. ETF MG Alternative Harvest ETF, MJ. One of the largest cannabis ETFs, investing in producers, distributors, and related companies. Advisor Shares Pure Cannabis ETF, YOLO, actively managed fund focusing on U.S. and international cannabis firms. Amplify Seymour Cannabis ETF, CNBs, invests in companies that generate at least 50% of revenue from cannabis. Horizons Marijuana Life Sciences Index ETF, HMMJ, Canada-based ETF with exposure to North American cannabis stocks. Global X Cannabis ETF, POTX, focuses on leading cannabis producers, pharmaceutical firms, and biotechnology companies. Risks of cannabis investments. Regulatory uncertainty. Cannabis remains illegal at the federal level in some regions, creating uncertainty. Market volatility. Cannabis stocks experience extreme price swings. Limited profitability. Many cannabis companies are still unprofitable and rely on future growth. Political and social risks. Public policies and consumer sentiment can impact the industry's success. Competition and oversupply. As more companies enter the market, oversupply issues may affect profitability. How to invest wisely in cannabis ETFs and mutual funds. Research the fund's holdings. Look into which companies are included and their growth potential. Understand fees and management costs. Actively managed funds usually have higher fees than passive ETFs. Assess long-term potential. Look beyond short-term volatility and focus on long-term industry growth. Diversify your portfolio. Avoid putting all your money into cannabis, instead, balance it with other assets. Should you invest in cannabis? Cannabis ETFs and mutual funds provide an opportunity to profit from the growing marijuana industry while reducing individual stock risks. However, given the volatility and regulatory hurdles, these investments should be part of a well-diversified portfolio. If you believe in the long-term growth of cannabis, investing through ETFs or mutual funds can offer a balanced approach to entering the market while managing risk.